All right. Hey, everybody. Welcome. We'll begin in just a minute here. Just going to give one more minute to let folks hop on. But thank you all for joining us. We'll start in 1 minute. All right, let's get going. Hi, everybody. Welcome. My name is Elise Lembo-Bazzelli. I am the Director of Program Development and Origination here at the Green Bank on the Financing Programs team. And today we will be talking about EV charging infrastructure with commercial contractors. And this is part of our CPACE program. So little refresher on CPACE here as well, and the ability to offer EV charging infrastructure projects through the CPACE program. So we'll hop right in. So just really quickly, just to talk about, we'll talk about the Green Bank briefly. I'll give you all a quick refresher on CPACE financing in general. Then we'll talk about EV charging infrastructure and kind of the simplicity of it when it comes to CPACE financing. We'll talk about the process, and then we can take any questions or anything in the meantime. Few housekeeping, everybody is muted. So if you have any questions, feel free to drop them in the chat. I'll probably try to power through this mostly. So if anything pops up as I'm speaking, throw that in the chat, and we'll have some time at the end for some questions. And I just did a quick intro for myself, but also just to let everybody know I'm joined by a few of my other colleagues as well. Heather Stokes, she is on the financing programs team with me, and does a lot of work with our contractors, especially on the front end of the process with lead generation, et cetera. So Heather's a great person to know. We also have Julio and Robert, both of whom are from our outreach team. And Julio is specifically working with us on a lot of contractor outreach stuff. So he's a great resource for general Green Bank contractor network information, and other things related to outreach and marketing as well. And also Rudy Stirk, also from our marketing team, handling a lot of our communications as well. So lots of Green Bankers here as well to introduce, but let's move into quick overview of the Green Bank. So the Connecticut Green Bank, we're a quasi-public agency. We were founded in 2011, really with the main mission of trying to deploy clean energy into the market, and trying to do that by leveraging the limited public dollars that we get to attract private capital investment into our state. And again, we started off with kind of clean energy focused, energy efficiency and renewable energy goals. And we've since really expanded that into other aspects as well, such as batteries, EV charging infrastructure, as well as environmental infrastructure and resilience improvements. And this is just a really quick overview of the types of solutions that we are able to offer. We have home solutions, which are for single-family homes. That's mostly our Smart E program, which some of you may be familiar with. Building solutions, which incorporates the CPACE program, our main financing program for commercial properties, which is what we'll be focused on today. Then we also have investment solutions and community solutions. Investment solutions are more kind of bespoke, if you will. If something doesn't quite fit into one of our programs, we have some options to think about creative ways to maybe help a property owner with a project. And then energy storage solutions, which is down at the bottom, that is our battery incentive program. And that is for both residential and commercial. And we run that incentive program in tandem with the utilities as well. And then last but not least, we have our contractor solutions, which is generally where we're trying to help create partnerships with our contractors across all of these different sectors, educate, train, do all of those things. Our contractor partners are really important partners to all of our programs. You all are the ones that are finding these projects and helping to bring the leads to us so we can finance a project or help get them an incentive. So it's really important that we are helping you all gather those tools and use those tools to actually help us do some of these projects. All right, so now to quickly jump into what CPACE is, our main financing program for commercial property owners. So CPACE is an acronym. It stands for Commercial Property Assessed Clean Energy. So it's a little bit different than the traditional commercial bank loan that you might get for a construction project. And we'll kind of talk through what those differences are here. But generally speaking, in order to qualify for CPACE, it is a financing product that is available to commercial properties for green solutions. So that includes energy efficiency work, renewable energy, so solar PV, energy efficiency work like HVAC upgrades or lighting retrofits. And commercial properties, that really covers anything that is not a residential home or a municipal or state property. So when you're thinking about CPACE and you're thinking about financing with CPACE, think about those kind of traditional commercial properties like office buildings, retail facilities, warehouses, industrial facilities, those types of properties, as well as multifamily properties. So anything of 5 units or greater is considered commercial, and that would be eligible for CPACE financing. And also nonprofit facilities as well. So things like museums, houses of worship, community centers that aren't owned by the town. All of those would fall under that commercial property umbrella. And you'll see down at the bottom there, we added EV charging infrastructure and resilience. So EV charging infrastructure, that's what we're here to talk about today, specifically, and kind of the ease of that and incorporating that into a project. And then resilience improvements, those are things that the property owner can do to their building that help to make the building itself more resilient or the property more resilient. So, really helping to adapt to things like climate change and making sure that their business can stay open and operational during things like storm events or, flood risks, et cetera. And so CPACE, was designed, as the name implies, for clean energy projects. So with that in mind, the idea behind this financing was that we would be able to offer long-term funding for up to 25 years. That's really going to be dependent on the equipment and the measures that you're installing at the property. But again, the idea overall is that we're able to offer these longer terms as a way to allow for property owners to actually realize some of the savings that they're getting from these improvements over time. So the idea is that you're paying a small amount of money over a long period of time and actually realizing energy savings or recouping some money through maybe something like an EV charger, where the property owner is actually, charging folks to use their charging money for folks to come in and use the charger to charge their vehicles. And the property assessment part of it, so commercial property assessed clean energy, that's where we definitely get into more of a veer away from the traditional commercial loans that you may be familiar with, where the CPACE financing that we're offering is secured by a benefit assessment that gets placed on the property itself. So a little bit different, of course, than kind of an unsecured commercial loan that you might get. But the benefit is that we're able to offer, in most cases, 100% of financing, which is certainly a difference than what you may have to put down when you're getting a loan from your local bank. And again, also that security in the assessment being placed on the property. And it stays with the property regardless of who owns that property, which again is also seems to be a really big selling point. We hear it from a lot of our building owners, that's a really big benefit of CPACE financing, especially when they're looking at things like solar or other things that maybe take a long time to pay themselves back. They don't have to worry about, a traditional ROI being a year or two, for example. Maybe they're thinking about selling their building and they're worried about realizing, the actual savings of projects. That's not really something they have to worry about with CPACE because that assessment is going to pass on to whoever takes over that building if they were to sell it in the future. So that's kind of CPACE in a nutshell. And I see some folks that are on the call here that have been working with the program for quite some time and have been working with the program when it was just focused on renewable energy and energy efficiency. And so you'll all kind of remember that or know about the famous savings to investment ratio requirement. What we're talking about today with EV charging is actually a little bit different in the sense that EV charging infrastructure projects have been exempt from that savings to investment ratio requirement, along with resilience improvements. But specifically for EVs, there is no savings to investment ratio requirement. Which is a good thing, right? Because we know that usually EV charging infrastructure is drawing extra power, not saving any. So we were able to get that exemption in place. The projects can still be paired with other improvements, which we'll talk about in a slide here in a second. But that's really kind of the big difference here with EV charging. So all of the rest of the requirements will still apply in terms of a CPACE project. So that's why I wanted to go through this whole kind of refresher on what CPACE is. But we'll talk about kind of the differences with EV charging infrastructure projects here in a second. Let's see if I can get to the next slide. Here we go. All right, and then just to give you all a quick idea of what we've been doing over the years. Again, I do see some familiar names, so good to see some folks joining that have been around for a while. But over the years, this is kind of showing you the cumulative close projects and what we've been up to. So as of the end of the calendar year last year, we were at over 400 projects, creeping up on about 430 at this time. So getting up there as we approach the middle of the calendar year. Over $360 million in projects closed. And really the big thing that I wanted to focus on here today is that top orange box there that's showing 114 contractors have completed at least one CPACE project. I think that's a really compelling number. to show you all, as I made the point at the very beginning, our contractor network is a very important part of all of our programs and all of our, using all of our products. But certainly in the CPACE world, definitely has been a huge help in getting all of these projects closed. We frankly probably wouldn't have 80% of these closed if it wasn't for you all. So really important that, we're making this program and all of our programs accessible to you and giving you the tools that you need to use them when you're talking to property owners about projects. And then just really quickly to emphasize those property types. So again, commercial properties. So we're not talking about residential homes. We're not talking about, town or city buildings or any of those, but commercial properties. And this is showing you, pretty good spread of the different property types and the projects that we're doing, the different buckets that we're kind of working in with CPACE. It's pretty evenly spread. So I think what this is really showing are not only the property types, but also the fact that CPACE really does work in a variety of different property types. And that's proof is in the pudding here. Okay, so to dig into CPACE for EV charging infrastructure specifically. So I mentioned already, it's exempt from the savings to investment ratio or the SIR. There is an audit, an energy audit, quote unquote, that is still required, which I'm going to show you here in the next slide. It's not really, it's not as scary as it sounds in terms of an energy audit, but we'll go through that in a second. And the terms that we can offer for EV charging are between 5 and 10 years. 10 years is going to be the maximum that we can offer for EV charging infrastructure. As some of you may recall, the maximum term length that we can offer for CPACE financing is going to be dependent on the effective useful life of the equipment that's being installed. And that stands for EV charging infrastructure as well. So what we've seen generally in the market, and through manufacturers' warranties, et cetera, is that 10 years tends to be the standard for warranties and for effective useful lives of these different chargers. So anywhere between 5 and 10 years. And that comes with an interest rate of anywhere from 4.5 to 4.75, depending on the term length, specific term length that you choose. Some of you may also recall that for projects that the Green Bank is financing, all of our interest rates are tied directly to the term length. So they're not dependent on, a credit check or anything like that we may do on a property owner. We actually don't run credit checks. That's not really how we do our underwriting for these types of projects. So these term lengths are going to be, the interest rates are going to be set based on the term length. And we also think that makes it a lot easier for you all to use this product and pitch these things and come up with presentations and proposals, knowing, upfront what that term length and what that interest rate is going to look like. There is a minimum project size of $30,000. So if you're talking to a property owner and maybe they want to do one level 2 charger, mounted right outside their building, that may not be the right fit for CPACE. They may not have enough, there may not be enough money there in financing to be able to do that project. But certainly if we're looking at level 3s or multiple chargers, banks of chargers, definitely a good thing to consider for CPACE, but 30,000 is really that minimum. Of course, property owners can still take advantage of any utility incentives that are out there. Those can definitely be utilized before they come in and look for financing for the remainder of the cost of the project. And a big thing here is that EV charging infrastructure can be bundled with other eligible measures and other energy improvements. So certainly something we're starting to see happen is solar projects happening, carports, different solar projects, but having those projects kind of spur the interest in EV charging and being able to offset some of that additional energy usage from the EV charging with renewable energy. Certainly a great pairing. And like I said, we've definitely seen some of those projects starting to come through, which is really exciting. So definitely still eligible to be bundled with those traditional energy measures that we may see. When we're doing our evaluation of these projects from a technical perspective, which some of you may be familiar with, but when we're doing our technical underwriting for these projects, the energy conservation measures like solar or any other efficiency projects, those are still going to be subject to the SIR. So those will have that SIR component to them. But if you're bundling an EV charging infrastructure project into the overall project, we will take that EV charging infrastructure project part out of the evaluation when it comes to the SIR. So again, we've got a process in place for that when it comes to the different measures. Okay. And just to show you quickly what that audit report looks like. So this is what we're calling the energy audit. Really basic information about the chargers, information about the chargers themselves, where they're going to be located, the equipment, all of that good stuff. So really not a heavy lift. This is an Excel-based collection sheet. This is available on our website to download. And we'll send around a follow-up, by the way, to this webinar. I don't think I mentioned that at the beginning, but we'll send around a follow-up with all of the slides and a few helpful links as well, including where you can download this data collection sheet. But this is really what we are collecting in place of something like a feasibility study or an actual, energy audit that you may be putting together if you're doing an energy project. As some of you may also be familiar, we also have a savings to investment ratio calculator that is available to you all as a tool. I don't have a screenshot of it here in this presentation, but we do have that tool available. It's been available now for quite a few years. Also an Excel-based tool. We have incorporated this data collection sheet into that calculator as well. So if you're doing a solar project, let's say, and now you're looking to include some EV charging infrastructure into that overall project, you're able to not only put in all of your solar inputs, but you're also able to capture all of this information on the data collection sheet in that calculator as well. What that does is it puts everything into one place, and while again it's not subject to the SIR, we still have all the components of the overall project in that calculator, which is helpful. So this is, again, available as a standalone sheet if you're doing just a standalone EV project, EV charging project, or it's incorporated in those other savings to investment ratio calculator tools as well. Okay. And now just to quickly talk about the process, the CPACE process in general. This is all going to be the same process that would happen for an EV charging infrastructure project, just in terms of the actual steps that you're going to take from application on through closing, along with the property owner. So the first thing that happens is that an initial application for financing gets submitted. We have an online application for that. It can be filled out by either the property owner or the contractor. We see it happen both ways. Really takes about 5 minutes, pretty quick application where we're just asking for information about the property owner entity, where it's located, what the project is going to look like, and what the cost of the project is going to be. We ask for mortgage information on that as well, ownership structure, and then of course, who the contractor or developer is on the project. That gets submitted to the Green Bank. We do a quick review for eligibility generally, and also just to make sure there's no major red flags up front. And then we move it into the underwriting and document collection stage or step, which is step 2 here. That's really kind of the bulk of what we're doing with these projects. It's the one that takes, the longest amount of time, lots of things happening. We're working on the financial underwriting with the property owner in tandem with working with you all as the contractor or developer on the project on the technical aspects. So this is the stage where we would ask you to submit that data collection sheet that we just looked at a second ago. And if you're, pairing the EV charging infrastructure project with any other energy conservation measures, also where we would be collecting that SIR calculator and any of the relevant information that comes along with that. Separately, we're also doing general document collection with the property owner, where we're working with them on lender consent, if that's applicable. And we're also collecting some other documentation like their governance documents. So things like their articles of organization or their bylaws and insurance information as well. Then once we have all of that information to us, we've gone through financial underwriting, everything looks good. We have all the technical aspects of the project squared away. That's when we can get the project approved officially. And then after approval, that's when we would work with the property owner on the closing. So we'll put together a financing agreement for the property owner to review. One thing that's really important to keep in mind as you're thinking about eligible properties or maybe, building owners that you've discussed EV charging infrastructure with in the past, is that this financing is always going to be with the owner of the actual property itself. So the property owner entity is going to be the counterparty to our financing agreement. So what that means is that we're not able to sign, a financing agreement with a tenant or with an operating company, for example. It's always going to be with the owner of the property. And that's because of the fact that, as we talked about in the beginning, this is a benefit assessment that gets placed on the property itself. So always want that property owner entity to be the one who is signing that financing agreement with us. So when we put that financing agreement together, we'll draft that, and we'll also include an estimated milestone disbursement schedule that we'll work with you all on, and you'll work with the property owner on to kind of agree on the different, stages of construction and what amount of money you'll need when. Of course, we aren't able to disperse any funds until after we close. So again, just something to kind of keep in mind if there's any pre-development costs, let's say, or permitting costs, that would be a conversation that you want to make sure you're having with the property owner ahead of time. And of course, we can always talk with them about that too, just make sure they understand the process. But if there's any costs that may arise, those are things that you'll want to discuss with them as to who's going to cover those until the closing has happened. We can always reimburse for any of that project cost that happens ahead of closing. Again, as long as it's related to the project, we can reimburse once we close, but just something to keep in mind when you're thinking about your cash flows and how that works. And then once we sign the financing agreement, that is typically when construction begins. So that's when you'll start your install, and those milestone funds will start to be dispersed. And then lastly here is when the project is fully complete. The last thing that we'll do is we will do a site visit where we send out our technical review partners. They come out to the site, physically come out to the site, and basically take a look to make sure that the equipment that we underwrote and what was included when we closed on the project is what was actually installed. So it's not really like a commissioning or testing of equipment necessarily. It's just to make sure, the right equipment was installed as it was described when we did our underwriting. So that's really what that data collection sheet is for, is to make sure that we have all of that information ready and available. So when the project is completed, we have what we need to do our inspection. All right. And quickly here, just to kind of round everything out, what we would love is for all of you to join our contractor network. Our Green Bank Contractor Network is for all of our products in different ways. Some of our programs and products have eligibility requirements. For example, our energy storage solutions program, you need to become an eligible contractor in order to offer it. CPACE is a little bit different, and I'll talk about becoming a registered contractor here in 1 second, but generally, I've already kind of mentioned this a few times, but it's really important that we have strong partnerships with our contractors. We want to make sure that we're, like I said, giving you all of those tools that you need to use these products in the market, and actually, get these projects done in all of the different ways: efficiency, renewable energy, battery storage, all that good stuff. But joining our contractor network is certainly a great thing to do when you're working in this space. Not only are you able to say that you're eligible to offer different programs, but you're also able to access things like co-branding. So once you become an eligible or registered contractor, you have access to our contractor network badge and also the ability to co-brand materials with us. So putting your logo next to ours, giving you, maybe some credibility in the market, knowing that property owners know that you're working with the Green Bank on these products. And of course, things like trainings, advanced technical support, things like that. So certainly something to consider. And with CPACE, it's not a requirement that you become a registered contractor. The CPACE program is open to anybody to do the work. Essentially, the Green Bank is contracting, as I said, with the property owner. So we want to make sure that we're allowing the property owners to work with whoever they'd like to, really. But the benefit is that if you become a registered contractor, you join our network, and we're also going to list you up on our website under the Find a Contractor tool. So what that means is that if we get a call from a property owner and they say, yeah, I want to do this EV charging infrastructure project, but I don't really know who to work with, we can direct them to that Find a Contractor tool, and your name will be there. So really good advertising for your company, of course, but also a way for property owners to easily find you, and know that not only do you offer this service, but you also have been through one of these trainings, and filled out a registered contractor application, which is the next step. The link is on the slide here. It's on our website, and we'll also send that to you. But we hope that you'll want to join our contractor network and become a CPACE registered contractor if you aren't already. And that is all I have. So my contact info and Heather's both up here, and also listing Julio's contact information there as well, for general information on our contractor network, and for anything around outreach and marketing. Julio is your guy there. So let me pause. I'll leave this up for just check the question and answer section. Oh, okay. Jim wrote and asked about resilience. So, Jim, we're actually still building that part of the program. So I don't have a specific answer for you there. We're not quite ready to actually finance those projects yet. We're actually working through figuring out a lending policy for that. Literally as we speak, we're working on that this month. We're hoping to have some sort of a policy out there to share with you all regarding resilience improvements. Likely in the fall is when we'll be ready to start promoting that. But generally speaking, resilience improvements are going to include things that are going to help a property owner adapt to climate change, or to fortify their building, make their building stronger and more resilient during things like storm events. Some of those major storms we've seen come through, random hurricane microbursts, whatever all of those things are called, things like that. So think of making the building itself more resilient in terms of adapting to climate change, and being able to remain operational and open during some of those events that we all know are happening more and more often than we'd certainly like to see. But more on that towards the end of the year. But thanks for that question. Any other questions from anybody? Oh, groundwater improvements is what Jim wrote. Potentially, yep. Again, we'll have more information on that in a few more months. Just specifically what we will be able to finance there. But we do have resilience guidelines that are posted right now. We just are working on that lending policy in between. But certainly happy to share those the technical guidelines around resilience as they stand now. Those are up on our website. We can share a link to that. Okay. Any other questions about the EV charging infrastructure and kind of that, standard offer, 5 to 10 years, 4.5 to 4.75%, no SAR requirement? Any of that? Any questions around that? Pop that back up. All right. Not seeing anything else in the chat. So certainly would love for you all to get in touch if you think you might have a project that would be a good fit. You can definitely give me or Heather or Julio, or really any of our Green Bank folks on the call here, a call or an email, and we can certainly help you determine whether or not we think that might be a good fit for CPACE. But we're hoping that the kind of specific nature of 5 to 10 year term, 4.5 to 4.75% for EV charging infrastructure kind of gives you all a little bit of an easy conversation starter around financing when you're talking to property owners about these projects. So again, get in touch with us. Oh, and I just saw, yep, we'll distribute the slides along with a few helpful links as well after the presentation for everybody that's attended. Okay. Well, thank you all for your time. Appreciate you all joining. We'll follow up within the next day or so with the slides and some helpful links. But again, in the meantime, certainly get in touch with us, and we'd love for you to consider joining the contractor network and becoming a registered contractor with CPACE, and offering these products. Thanks, everybody. Have a great rest of your afternoon.